Welcome to Trading Nation, and today we are pleased to be joined once again by Jeff Saut, Chief Investment Strategist at Raymond James. Jeff, is it possible to be a short-term bear but a long-term bull?
Yeah, I think it is. You know, Peter Lynch used to make the simplest observations, and by doing so, divine these incredibly good investment insights. And one thing nobody's talking about is the Trump rally started on November 7th of last year. And this year, the rally peaked out on November 7th of 2017, just when people could sell the stocks they bought pre the presidential election and make long-term capital gains. I find that a simple observation, but I think it's a pretty good investment insight.
What about all the tax bill kerfuffle? I mean, there's a lot of concern. No one really knows what's going to happen. So do you think that that causes us some uncertainty until we know what this final bill may look like and if it's going to pass or not?
Well, I don't think you're going to get tax reform. I lived in D.C. Beltway, still pretty well connected on the Hill. I do think you're going to get lower corporate taxes, which gives you upside to next year's S&P bottom-up operating earnings, which means to me that stocks are not all that expensive. So even if we get a 5 to 8% pullback here, I think it's a buy in a continuing structural, secular bull market that has years left to run. So I think the tax bill is more noise than actual fact here.
Do you worry about, looking at high yield? We talked about that on our show on CNBC today, that maybe the bond market, a flattening yield curve, is signaling like something wicked this way coming?
Yeah, I don't think that's the case. I think the numbers that came out recently on the economy are stronger than a garlic milkshake. I think the economy is a lot stronger than people think. Consequently, I think earnings are going to continue to come in better than people think, and people remain underinvested. They're still worried about a crash in the equity markets.
Yeah, well, when you got all these surveys about bullishness at record high, there's not a lot of cash left. I'm sure you've read these things, you've heard these things, that some people think that stocks are overvalued, but they continue to invest. Why are you able to just blow all that stuff off, Jeff?
Well, I don't think stocks are all that expensive. I mean, if you look at the long-term PE ratio on the S&P 500, yeah, it looks expensive, but there are more high margin, high growth stocks in the S&P than ever before. You've had this tectonic shift from tangible assets on balance sheets to intangibles, which by definition means higher valuations. And if you look at the S&P and take out the PE ratios, the aberrational low PE ratios in the 70s and 80s that were driven by high inflation and double-digit interest rates, and start on January 2nd of 1990 and get the S&P's PE, January 2nd of 91, 92, 93, the average PE up until the January 2nd of this year is 23.85. So I don't think stocks are all that expensive.
It's sacrilege for me to say this, I guess, but do you care that much about the so-called Fang stocks? I promised myself I wouldn't use the acronym, but now I guess you almost have to, even though it makes no sense because Google is actually an A, FANA. Do you care about these names? Do they signal anything other than just excessive trader interest in a few stocks? Do they signal the market, in other words?
I think Google's trading at 33 or 34 times earnings, but the company's growing at 40% a year. So is that expensive? I don't think so. Could we get a pullback here? Your point on junk bonds collapsing is a valid point. You've had a breadth divergence in the latest rally. You've had lower volumes despite the S&P making new all-time highs. There's been big divergence in performance. 29% of the S&P 500 stocks are actually down on the year. So yeah, in the short term, you can be cautious here. In fact, we are looking for some kind of pullback, but I think pullbacks are for buying.
Jeff Saut, Raymond James, remaining long and strong in the long term. Jeff, it was a real pleasure as always, buddy. Thank you for joining us on Trading Nation.
You bet, Brian.
Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.